comes to today's analysis. And of course, we'll be using Deriv once again and be starting off with volatility 75 1 seconds. Now, using the H4, I've already marked out some structure which is this trend line below this. Now, there's something I actually said last week. I said the only time looking forward to a bullish trade, it's a break above it. That's the only time that tells us that the market is ready to go bullish to this level. So long as it's still in this zone, in these structures, we are not placing any trade yet. Now that means if we want to go on a bearish, we want to see the market breaking below this zone for us to go bearish on this level. So that means there are two things here. Now I haven't placed any trade on for 75 for let's say for some days now because I actually put the first trade. The first buy was around this level where we targeted this and we took that. But then since then I've not really taken any trade because I was expecting to continue moving them. You can see this what's it called replacement to this level. So if it's able to break above this then I still go long to this level. Otherwise I wait for it to break below it to tell me that this is a good time to actually go short on this. So this is what I'm actually looking at currently. Breaking below this and testing it to go short on that. So that's for volatility 75 1 second. So go to the volatility itself, which is 75. Volatility has been very bullish, sorry, very bearish. So I don't really think I'm taking any trade on it here because why am I not taking any trade? Because there's no really good structures for me to actually put my stop loss. I can't just go into trade because it's already trading. I just want to jump in it. Yesterday I took trade. I think the stop loss was somewhere around here. That was not even yesterday. I think it was yesterday. Stop loss was somewhere around above this level. Then I took it to this. I think somewhere around this level. Then I went out. So since then I haven't placed any trade. So for now again, I'm not taking any trade except I see a good structural change on the bearish axis of it for me to go short on that. Otherwise, I won't be taking any trades still. So my finger just closed on volatility 75. I don't want to chase the market, just want the market to give me structures for me to trade. Okay, go to the next one. Let's go to the boom 500. And then we are going on the H4. I said today I was not going to be placing trade on boom 500. Why? Because it's not really giving me what I'm expecting. Now this market is currently bearish. So I'm looking for the only bearish trade, not bullish trade. And even the bearish is not really giving me good bearish. It's moving exactly more like up and down, up and down. So I can't really say the bearish is actually bearishing. If there's any word like that. Now you can see even the bullish is not really giving me this kind of bullish trend. So still there's no any confirmation on boom 500. So my fingers are still crossed. So my fingers are still crossed on boom 500. I'm not really doing anything much on boom 500 for today, being that there's no any confirmation yet. So go to the next one, which is going to be boom 1000. Okay, H4. All right, currently bullish. Remember, bullish is on day trade, judging from this level to this level, and not on this bearish level we are seeing right here. The first 15 minutes, I can see that it's actually bullish there. So that's where the day trade comes in. So you can see a change of structures moving from this level where it was down here, breaking above this level to this level, coming down here, then breaking above this level, coming down here, and above this level. You can see it right here, breaking above that level. So that's the change of structure already on the bullish aspect of it. So I would like to see this continue. Actually, I'll be going long on it. I'll be going long on what's called boom 1000, putting my stop loss below this level, then take profit is there. Okay, just a moment, let me place my trade. Okay, from 1000. Alright, Alright, I just went long on 1000. Good. Alright, so this is the trade entry. My stop loss is actually open, so my take profit just open. I didn't put the take profits, just the stop loss, just where it is shown right there. Alright, that's that for 1000. So go to the next one, which is going to be cash. So we are starting with cash 500. Remember, please, your lot size should be lot size you can risk. Alright, so let's go to H4. I actually do a bearish structure here that I'm only for bearish trade only when this level gets broken. Then the market was actually here. Now currently it has gotten to that hour structure. So now that it's there, we are expecting a break below this retracement for us to go short on that. So we can keep fingers crossed and keep eyes on crash 500. If you can get a break below this our current level there, then we'll be going short on crash 500. Remember, not yet until we get a break below this zone. All right, so that's that for cash 500. Go to the final one, which is going to be cash 1000. Pam, 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 pam. Okay, marking levels and it's already broken that level, broken far above our entry. So there's nothing we can do right now except we see a pullback, then a confirmation of the market for us to go long on that. That's the only time I'd be more than glad to go long. So for now, I just let cash 1000 go. All right, that brings us to the end of today's analysis. Of course, with Deriv. Remember, Deriv is synthetic market, not just synthetic market, but this particular one we analyze synthetic market. Deriv also offer the forex market, they offer stocks, they offer indices, they offer several other tradable assets. So in case you're not familiar with them, you can check the description. I'll be leaving a link there for you to register an account with them. That said, that brings us to the end of the analysis. Always remember to stay safe, and don't risk more than you can afford to lose.